Let us see the next question. The price of March Nifty Futures Contract on particular day was 9170. The minimum trading lot on Nifty Futures is 5050, that is the lot size. Initial margin is 8% and maintenance margin is 6%. The index closed at the following levels on the next 5 days. Day 1 to day 5, settlement price is given to us. You are required to calculate mark to market cash flow and daily closing balance on account of an investor who has taken long position, that is purchase at 9170, an investor who has taken short position at 9170, net profit or loss on each of the above contracts. That is the question. This is a question asked in January 2021 examination. Question number 3A for 8 marks. So over here, let us see that's how to make the calculation of answer of 1A. In that say, again we are required to prepare 4 workings. First of all, we are required to prepare the working note for initial margin. Next is the maintenance margin, then profit or loss on the daily basis, and lastly we are required to prepare the margin statement. So let us answer the question. Answer of question number 1A. In that, write down working note number 1, calculation of initial margin. So in that, it is futures contract into initial margin percentage. The futures value is 9170 into 5050, that is the lot size, into initial margin is 8%. (9170) into 5050 into 8%. So 36,680. That is the way the initial margin is calculated. Working note number 2 will be calculation of maintenance margin. It is futures contract into maintenance margin again in percentage term. (9170) into 5050 into 6%. That comes to 27510. That is the way the maintenance margin is supposed to be found. Working note number 3, calculation of profit or loss on daily basis. So in that, column number 1 is day, column number 2 is sale price, column number 3 is purchase price, then profit or loss. That is, at the end of the first day, the closing price is given as 9380. The purchase price is 9170. So what will happen? It is 9380 minus 9170, profit or loss of 1 unit, into lot size is given as 5050, into number of contracts is 1. 9380 minus 9170, that comes to 210 into 5050, that comes to rupees 10,500, and so on. We are required to make further calculation. I request all of you to complete the working note number 3, and based on that, you prepare the margin account. Chalo, on second day, the closing price is 9520. So assuming that at the end of the second day, if at all the trader square off the transaction, what will be the profit or loss? 9520 minus 9380 into 5050 into 1. 9520 minus 9380, so it is 140 rupees is the profit, into 5050, that comes to 7,000. On the third day, the price is 9100. This is 9520. So 9100 minus 9520 into 5050 into 1. So loss of 420 into 5050, that comes to 21,000. On fourth, the closing price is 8960. So this is 9100. So we understand it is 8960 minus 9100 into 5050 into 1. So it is 140 into 15, that comes to 7,000 rupees of the profit. Then on fifth day, it is 9140. Sorry, there is a loss. 8960. So 9140 minus 8960 into 5050 into 1. So 9140 minus 8960. So there is a profit of 180 into 5050, that comes to a profit of rupees 9,000. This is the way the profit or loss is required to be calculated on daily basis. So now we are required to prepare the margin account. So margin statement, in that day, particulars and amount. First of all, you are required to make the payment of initial margin. When the contract is initiated, the amount of the initial margin is 36,680. On the first day, there is a profit of 10,500. Day 1, there is a profit. So 10,500, 36680 plus 10500. Closing balance at the end of the first day, 47180. Second day, again there is a profit of 7,000. So plus 7,000 is 54180. So on second day, there is a closing balance 54180. On third date, there is a loss of 21,000, huge loss. It is say 21,000, and the balance is falling down to 33,180. That is on the third. The maintenance margin is 27,510, but the balance has not fallen down below that. So there is closing balance 33,180. On fourth, again there is a loss of 7,000. So on fourth, the closing balance before margin call. Why? Because it is 26,180. So closing balance before margin call 26,180. So on fourth, there is payment of margin. What you can see that say the amount of the initial margin is 36680. So 36680 minus 26180. So it is 10,500. So on fourth, there is closing balance 36680. Fifth day, there is a profit of 9,000. So on fifth, there is a closing balance of 45,680. This is the way the amount of the profit is added to the margin, and the closing balance at the end of the fifth day is 45680. So write down answer 1B. In that, of course, the initial margin and maintenance margin working notes are not required, and as far as the profit or loss on the daily basis is concerned, it will be exactly opposite of the long position. So write down in that a note: calculation of profit or loss on daily basis would be exactly opposite to long position. Full stop. So now we can prepare the margin statement. Day 1, day 2, day 3, day 4, day 5. I'll just write the profit or loss over here so it can be easily accessible, and then we'll prepare the margin statement. Again, in that, column number 1 is date, column number 2 is particulars, column number 3 is amount. So you start with the payment of initial margin. The amount of the initial margin that you pay is 36680. Then on day 1 onwards, we'll write the profit or loss that we have. So on day 1, there is a loss of 10,500. So 36680 minus 10,500. So it is 26180. It is less than the maintenance margin. The amount of the maintenance margin is 27,510. So on the very first day, you are required to make the payment of the margin call. closing balance before margin call. So on the first day, payment of margin. How much margin is required to be paid? 36680 minus 26180. So it is 10,500. So on first day, closing balance is 36680. Second day, there is again a loss of 7,000. So after deducting the loss, balance is not reducing below maintenance margin. So this is the closing balance, 29680. Third day, there is a profit. The amount of the profit is 21,000. So on third day, of course, there is no question of the margin call, 50680. On fourth day, there is again a profit. That's really very good. The amount of the profit is 7,000. So on fourth, there is closing balance 57680. On fifth, there is a loss. Amount of the loss is 9,000. So on fifth, the closing balance is 48,680, which is more than maintenance margin. So there is no question of the payment of the margin. So we understand that, say, the second part of the question, net profit or loss in each of the contracts. So if at all you have taken a long position at 9170 and finally the closing price is 9140. So what will happen? 9140 minus 9170. So there is a loss. Why? Because the sale price is less than the buy price. So there is a loss of 30 rupees into 5050. That is, so the lot size into number of contracts 1. So there is a loss of 1500 rupees in the first case. In the second case, where you have entered into the transaction to sale at 9170, so of course you will be having, say, the gain of 1500 rupees. And if at all you will prepare the cash book, even in that case you will get the same answer, considering at the you have squared off the contract at the end of the fifth day, set this price. So please write down final answer. Answer for the second question. Calculation of the profit or loss. In that, sale price minus buy price is the profit or loss. For long position and for short position. As far as the buy price is concerned, in case of long position, buy price is 9170. That is the price at which the contract was entered upon. The last day price is 9140. Into 5050 into number of contracts is 1. So there is a loss of 1500. In case of short position, you will be having sale value at 9170 minus 9140 into 5050 into 1. So there is a profit of 1500. This is the way the amount of the gain or loss that is supposed to be calculated.